ladies and gentlemen, we are back from Barbados. I had never been to Barbados before, and I promise you, it was an amazing time. Not only do these people live longer than most people I know about, they told me about a story about this 102-year-old woman that was put in a nursing home. She's 102, you all. Most people that are 102, they're not even alive, really. They're just bedridden. But they put her in a nursing home, and she didn't like it. She said, I want to go back to my house. And they said she walked 3 miles back to her house, and she was 102 years old. So you know this place has miraculous water, miraculous foods. I mean, everything that you need from the medicine cabinet is in the food in Barbados. As a matter of fact, they said they just got their first kidney dialysis machine on the whole entire island of 300,000 people. One kidney dialysis machine, because they don't get kidney problems there because of the types of food that they eat. Isn't that a blessing? So anyway, I just wanted to share that with you because we're going to go back on vacation and we're going to eat off the fruit of the land. Amen. Well, anyway, tonight we're going to talk. We're in our fourth series. We're going to talk about when to buy these shares of stocks, when to buy these different companies, when do you want to become an owner of these companies. And that's what we're going to talk about tonight. If you've been reading along in the book, then you already know what the answer to that is. And we're going to just talk about that briefly. But before we get started, just want to tell you that the book is available in hardback. I mean, you can go and get it so it will last forever. You know, when you get it in paperback, sometimes it gets flimsy. And after a while, the binding breaks and then the pages fall out. But now you can get another book in hardback. And this would be a great Christmas gift, you know, to send out to your children, to your children's children, if you have grandchildren, or to your other relatives that might need to have some of this information, okay? You can get that through Amazon, Barnes & Noble, Books A Million, and of course, internationally at Saxo.com. And guess what? The electronic versions are now available for download. So I'm excited about everything that is happening with the book, happening with the tour, and I'm just glad to have all of you on board tonight. So as we get started here, we're going to talk about some of the objectives as always. It is our objective to engage you on all these different levels, depending on your needs, your goals, and your risk tolerances. Not only to educate you, but to assist you in reaching, and ultimately we want you to exceed all your financial goals. We're going to teach you and help you increase your financial literacy in the areas of not only income protection, because we haven't even talked about that yet, that's coming, how to save properly, investments, wealth building, and then retirement planning. All these things are designed to help you make your money work for you. In other words, you're putting your money to work instead of you going to work. And I really appreciate that. John, I told him some of those things we're going to talk about tonight. And he was like, really, that's possible? I said, yes, that's possible. But here's a testimonial from a friend of mine named Michael Dunn. He's one of the first people that I ever started working with. And you can kind of read along with me here. Danelle, I cannot thank you enough for the insight and wisdom and direction you have provided for me. And after the stock market crash of 2008, my retirement account plummeted. And under your guidance, I've watched my portfolio grow by over 300% in 6 years. Do the math, that's 50% a year, right? Your willingness to do research and your knowledge and understanding of the stock market is second to none. I've been doing this since I was 21 years old. I'm now almost 59. I'll be 59 in December. So you do the math on that, and you can see that I've been kind of playing with this a long time and really got that formal education back in 2006 and 2008 and with 2 master's degrees in finance and international business. So I really do enjoy this. But the most of it came from all those books that I share with you on day number 1. You can go back and look at that if you missed the first time that we were on the air. Rule of 72. Why do I want to talk about this again? I was sharing this with John earlier that the industry wants to keep you somewhere between 5 and 7%. They promise you 5. They usually deliver between 7 and 10%. And they go, well, we under-promised you, but we over-delivered. So you are really, really happy. But even at 10%, it's taken 7 years before your money can double if you just had a solid, just one lump sum investment. If you put money in on a regular basis is what I like for you to do, because you can then catch the stocks on sale when they go on sale. then you can take this number and it should drop down to 6 or to 5 or to 3 years if you're doing it the right way. Okay, and that's what we're talking about tonight. And one of the ways you can take this number from 7% to 15 to 22% up to 100% is to what? Buy on bad news. And that's what we're talking about tonight, buying on bad news. Amen. All right, getting started. First thing you have to do is download the app. You can kind of see that. It tells you that right there. And the app is app.thecmfg.com. Go ahead and fill in your information in the VIP section and getting started. Make sure you add it to your home screen. That way you'll get all the updates and all the alerts as we go forward with everything. And anytime tonight you have a question, go ahead and put it in the chat box. Because what happens is if you put it in the chat box, then at the end, when I play the music and I say you have 2 minutes to put your question in, you already have yours in there. And so if you think of anything at the end, then feel free to add another question. So we'll answer all those questions at the end of this webinar. All right, when to buy. A little bag there, when to buy. You buy on bad news. You always buy on bad news if you can. Sometimes you can't, but I like to buy on bad news. I have several great examples for you tonight. And here are some of those companies we discussed last week. We talked about all these companies, and guess what? All of these companies, at some point, they experience some bad news, which means that even though the price might be high now, there are times when these prices come down and they're on sale at 20% off, 30% off, because that's when I want to go shopping. If you go to a couple of days before Christmas, everything's extremely pricey. But if you wait till after Christmas, you get about a 10 to 20% discount. But oh, help you when you go after New Year's. It's 40, 50% off because they're trying to get rid of that inventory and they're trying to get ready for spring line coming in. And so that's the same concept here. You want to buy the stocks when they're on sale. Does that make sense to everybody? Shake your head. Yes, I can't see you, but I can feel your, I feel your spirit. Okay. So yes, we want to buy these things when there's bad news. And these are great companies, not any old company, but great companies. Have to be great companies, otherwise it doesn't work. Now, let's show one that we know is a great company. Apple is a great company. You might be a Samsung person, but if you want to make some money and make your money work for you, you can put your money to work inside of Apple and let it work. Let's take a look at the first bad news here in 2013. 2013, we had a little crisis in the country, but the bad news there for Apple was they missed an iPhone estimation of how many sales they were going to have. So guess what? All the people on television, all the pundits, we call them, they badmouthed them so much that the price of the stock went down $30, $40, $50 a share. As a matter of fact, it went all the way down to $69 a share. Well, we took the advantage of that and we bought another 400 shares of stock when it was down here at $69 a share. We watched it rise because right after that, one of the gurus of the industry, Warren Buffett, bought a couple of million shares and it came back up. It happened again in 2016. Bad news. They said the iWatch sales weren't going very well. And that's just what they said. We're not sure if that was true or not, but because they said it and they kept repeating it on television, the bad news caused the stock price to go down. People tend to sell on emotion. When they hear that something bad has happened to a company, they rush to sell their stock. And when people all rush to sell their stock, you have a flood of stock on the market, just like you do at Christmas time when you're trying to sell products and get them off your shelves. What do? You lower the price. Same thing with stock. So when you're trying to unload some stock, the price goes down, and guess what we do? We don't worry about it going down except for the fact that we are excited because we get to buy it on sale. And you notice after each big dip, it turns around and it goes back up. It stayed down here in this area for about 4 or 5 months, but that's okay. We're not worried about that because we are all long-term investors. Remember, we're trying to do this over a period of time. And if we get compound interest working for us year in and year out, this will all even out to the tune of about 30 to 40% a year in a company like Apple very easily, very easily. And you can see here, they had a huge run all the way up here to above $240 a share, and then it dropped way down right here. And when it dropped right here, that was another reason. They said they were going to move to services and stop reporting individual sales of Apple iPhones, iWatches, iPads, and things of that nature, and they got punished by the industry. But guess what, ladies and gentlemen, it doesn't matter. They got punished, but they kept producing what they're producing. People kept buying watches and phones, and the price came right back up. So if you just took advantage of this move, just last little move they did just recently here, if you kind of extrapolate, you'll see it's about $160 a share that it went down, and it came all the way back up here to $220 at some point. Today it was down a little bit, but it was all the way up here. So 160 to 220, you do the math, what do you come up with? That's right, that's $60 move. So if you have 1,000 shares of Apple over a period of just a few months, about 6 or 7 months, you made $60,000 in Apple. That's what I like to see you do. Make your money work for you. You make it work. Had you bought down here, that same money would have moved up that distance, you know, had you just held on to the stock. So it might have gone down in the dip, but don't sell in the dip. Remember, don't sell when the price goes down. We only sell, and I'll teach you that next week, when to sell, but we're going to talk about when to purchase right now. Visa. I love Visa. You heard the story last week. It's one of my favorite stocks. Visa doesn't go down very many times. It doesn't have many drops, if you will, in the price. And it had a stagnation here in section A. You can see the stagnation for a few months. Guess what? When you have a stock like Visa that doesn't go down very often, when you see a stagnation period, that's your time to take whatever month the amount you have to invest in the stock market to get involved with Visa and start buying up shares and try to get your share count up higher over that period of time. Because think about it, had you gotten your share count up during this period of time, then all those shares now are working as it's going up to the next level. Now it levels off again. Maybe you built some money up in here while it was going up. You didn't buy anything. You were just waiting for it. And now you got a chance in this little tiny dip to buy some more. As a matter of fact, Visa right now is down about $8 from its high. So even right now, as of today, it's in a period where you can buy some more shares and then reap the benefits when it starts to go back towards its all-time high of about $188. $188, I believe, is all-time high. So that's Visa. So here are some examples of no bad news for Visa. It's just one of those stocks that you can just buy it pretty much at any time and just watch your money grow. It's a pretty cool company. I like Visa a lot. Same with MasterCard, okay? I just chose Visa because of other reasons, which we'll talk about at another time. Now, Netflix is a special case. Netflix has some ups and downs, but some of their ups and downs were caused, some by themselves, mostly by analysts. But here's the first one that happened, number A here, back in 2010 timeframe. That's when Reed Hastings, the CEO, announced that he was going to start charging for not only online, but he was going to charge separately for the mail-in DVDs and things like that. I don't even know if they still do that. I don't know, maybe some people still get those DVDs in the mail, but I mostly stream it myself. So one of the things you can see is when it dropped, it went way down. That was the first time I bought 1,000 shares of anything. I bought 1,000 shares of Netflix right there, and it was around $59 a share, which was an amazing time to purchase Netflix, okay? The second one, an analyst came out and said, they're going to have all this competition from CBS, from HBO, from all these other companies that are started streaming. All the networks started streaming about that time in about 2015. And guess what? The price of the price of Netflix went down quite a bit. That was another opportunity to purchase. And when they came out with their report about how many new subscribers they had, I remember Netflix went up $72. Can you count? $72 in one day. So here, if you see in the B section, that's a sharp rise here that you can't really see because it's kind of wide. It's over 10 years here. But right there was $72 in one day. So if you have 1,000 shares, do the math. That's $72,000 that the stock made in one single day. But it didn't stop. Look what it did. It continued to rise up and up and up and up. Now we have some more bad news going on. I'm going to talk about that specifically here because of these analysts over here talking about Netflix and all their challenges. This is what has happened. So let's go down to the next one. So here it is. For the past 30 days, what has happened to Netflix? Well, the analysts on TV have said that because Disney is coming out with their new programming and their streaming program and their platform, and because Amazon is stepping up their game and you know, all these different things. It forced the price down. And also the second quarter of Netflix, they had a shortage on their not their earnings, but the number of subscribers. But guess what? That just gave you what? A great buying opportunity. See, that money went from $300 a share down to $240 a share. That's huge. 300 to 240. That's a $60 turnaround. And then it went from 240. I'm sorry, is that right? Yeah, it went from 240 back up. Just in a few weeks, it went all the way back up to 280. From 240 to 280, that's $40. So if you own 2,000 shares of Netflix, like we do, that's $80,000 that you made just right here in that 2 to 3 week stretch. If you bought all of it right here, you made the full amount right there. Of course, ours just because we already had it, okay? But I did add to it as we went along. Amen, right? So guess what? This is what happened on September 19th. This is the reports that were out. Everybody was talking about Netflix. Everybody was giving them a hard time. And it said that it steadily slid since reporting the second quarter earnings. And the Bernstein analyst, Todd Junkins, investors are increasingly asking us, where's the bottom? And he said about $230, which is a 20% drop from the current price. But despite that, they said they're going to stick to their rating. They said, we think it's going to be about 450. And I personally think it's going to be about 450 here in a few months as well. And they said the shares have been under all this pressure because of the disappointing second quarter results. What is that? Disappointing second quarter result. That's what? Bad news. That's all that is, bad news. And we like bad news. And then on Thursday, he said he wanted to answer their questions about how long will this slump continue. So bad news is a good thing, not a bad thing, especially with a great company like Netflix. As we talked about last week, they are international all over the world. And they're the only streaming service that does that. But guess what? This is from today. Netflix stock rises as Goldman Sachs stays bullish, but cuts the price target below the street average. And it surged in the morning 1.4%, right? That was the morning trading. But guess what happened in the afternoon? That was the first portion. Look what happened later in the day. That was 10 o'clock in the morning. It had gone up quite a bit. And then by the end of the day, it had made it all the way up to $280. It started the day at $265. At the end of the day, it ended at $280. What's that, $15? That's 15, yeah, $15. It moved in one day. So if you take 2,000 shares times 15, you made $30,000 in one day. So if you think about that, that's not shabby at all as far as making it. So a $12.95 move to the upside, which is really 4.9% in one day. And see, when you talk about the chart I showed you earlier, the rule of 72, they're saying we can make you 7% in 1 year. Well, if you're making moves like 4.9% in one day on a stock like Netflix or Apple or Amazon, then the 7% doesn't really seem all that great, does it? So that's what I want you to understand. If you buy it on bad news and you are patient with it, it will pay off. See, people are very emotional about their money, as you know, and when they start seeing the red in their accounts, they get scared and they start selling at the wrong time. And really, that is the time to buy it on sale. I hope I'm making that pretty clear. So can you think of some great companies that overcame this bad news and all of a sudden their prices soared up afterwards? Let's take a look at a few of them. We got Nike, Chipotle, that's Facebook here in the middle, if you didn't remember that, and then Starbucks here on the side. Look at Nike. Right here, the team lost the NBA Finals to a group that had Adidas, and Adidas started taking up more market share. Nike lost market share, and in the news, they reported that so much. Every day, they talked about that, and it forced the price of Nike stock down. Well, of course, we decided to buy some when they forced it down. And these are just my companies. You might have your own companies that you've already picked, because last week we talked about what stocks to pick. That was based on your own personal preferences, things you use, things you understand. But we like Nike. Our kids like Nike, and so we bought it there. And then Colin Kaepernick comes along, and they said, you should fire him. You should make him go. The president jumped in and forced the price of Nike down, put a lot of pressure on it. But then after the Colin Kaepernick ad came out, all the people started buying Nike again, and it soared again. So you can just see that little tiny move there is worth about $20 a share. So depending on how many shares you have, of course, it's 20 times the number of shares. You made all that in just a few weeks, okay? So just kind of a nice way to see how this thing really works. It's really good. So anytime you hear bad news and they're talking about it on television, you know. Now this one is a classic. This one was a little bit of a longer play here. You couldn't do this one overnight. It didn't happen in a couple of weeks. It took about 2.5 years for this to develop. But if you remember back when they had this food poisoning scare at Chipotle in 2 different locations around the nation, the prices just plummeted from about $750 a share down to almost $250 a share here. And then if you had bought in there, as a matter of fact, it plummeted down here first, and then they had another scare. That was the second scare, and it dropped it down again, even lower. I'm sorry, down for the food poisoning. And then it took off slowly, and then it slowly, and then quickly it started rising again. And you can see these massive jumps here. $474,000 had you owned 1,000 shares of Chipotle at some point, or 500 shares would have been $250,000 you would have made. But that's a 123% increase from that low point. See, great companies always bounce back. Just because the stock price went down didn't mean that Chipotle was not making their great burritos and their great bowls and all of that. People were still packing the place out every day. It just took a while before the people forgot about all the food poisoning, and then the investors go, hey, that company's doing great. Look at their return on investment. We're going to jump in. And so they started buying. Then the younger people started buying, and then all the institutions started buying, and that just forced the price right on up. So just the same way as things go on sale, things get expensive when everybody wants to buy the stock, the price goes up. So we want to buy it when it's down so that we can reap the benefits when it goes up. Last but not least, we got Facebook and Starbucks. Facebook had an identity theft here. Then they went to court here. Bad news, bad news. But look what happened after the bad news. They just soared on up. Little bad news there, soared on up. They went to court. And they're just coming out of that. And they had a little bit of bad news this week about Zuckerberg. Something happened there. So some more bad news. Starbucks. They had some racial discrimination about a year ago. You remember that. Guys were sitting in there not doing anything wrong, but then it caused a problem. And then they had to face the music of that. So just different little things that could cause a company to have some bad news, but they're still considered great companies. They make usually a strong comeback. Sometimes they didn't do anything, but it's just a public perception or consumer sentiment about that problem, and it causes a big price drop in the stock. And other times they actually have to fight it out in court or make amends for their actions. And anytime you hear that thing about a great company that you already are participating in, you already use their services, you already use their products, what a great time to buy some of their stock. So what are you gonna do when you hear bad news about a great company? Are you gonna do nothing? Are you going to sell all your holdings and run away from them? Or are you going to buy? You know, that's what Kramer says, buy. Anyway, we're going to buy. That's what we want to do. That's what I want you to do. It doesn't matter what the companies are. That's up to you and your family, whatever you all participate in those companies that you feel are great companies and you know that your neighbors are using it, all the kids are crazy about it. You know that's a great company to have, okay? And you can find it anywhere in the world usually when that happens. So, we come to the end of tonight's session. It is 9:23. I want to take about 2 minutes for you all to type your questions in. I'm going to play some music. Type your questions in, if you will. John, anything you want to add before we go to questions?
Yeah, the question I talked earlier, but you answered it, but I just want to bring attention to that. You were saying that when bad news and when the prices drop, it's because the perception that people have of the situation, they begin to sell their stock. And when people are selling the stock, it floods the market, which brings the price down. That's the time to buy. Is that what you're saying?
Yes, sir. And what is really happening is you have these computers inside the mutual funds and institutional investors. Their computers are tagged to say, if the price drops more than this percent, you have to sell. And so their computers are programmed to sell. The problem is when one computer sees another computer sells, and it drops even lower, then all of a sudden what happens, the computers all start selling. And when all the computers sell, the prices get really cheap. And you can have little mini crashes all the time. As a matter of fact, we've been experiencing that the last few weeks. A lot of mini crashes. Whenever they mention the China war, it crashes. You know, the computers start selling it off. and that makes great buying opportunities for us. This time that we're in, John, is not going to last always. So we can take advantage now and start building up the number of shares of the companies we want to be owners of. We can build that up over the next few months or next 2 years. And then when things get better and we start a nice trajectory, you're going to just see your account soar.
You know, most people know the movie. I think they're talking about the Coming to America.
Yeah.
When they were selling their stock and and they got rich because they purchased at that time. So
yes,
that's
sir.
what you're saying. So here's a question: when is your next on-site seminar in the Atlanta area? So I'm thinking thinking about an actual physical seminar where people can come to.
In the Atlanta area, we're going to it's either going to be on the 5th or the 12th of November. I'm not sure about the date yet, but it's either going to be the 5th of November or it's going to be the 12th. But we'll let you know next week. I should have the answer next week about that.
And the thing about it, that we do have an events tab on the app, and so we'll be updating that. That's one place to know, to see what the next events are, where you guys are going to be.
Amen. Yeah, that's what we're going to be. And the next place we're going to go out of town to is Palmetto, Florida. That's in the Tampa area, Sarasota. And we're going to be over there for a 2-day seminar. 2-day seminar over there doing financial literacy. And we'll come back to Atlanta after that. We have a couple scheduled for Atlanta. I know one is probably either going to be on the 5th and another one's going to be on the 12th. But those are Tuesday nights. And then we're going to schedule one for the weekend where we'll do a 2-day seminar where people can come out in the Atlanta area and participate. But we're definitely going to put out all of our dates to the different locations we're going. And if we're invited anywhere, you feel free. If you live in another city, I see some people here all the way out to California, people in Colorado. We certainly will jump on a plane and come into your city. And if you set it up and invite some people out, we will come out and do a full seminar with you. Just let us know. John? Anybody else have a question? Please type in.
I think that was a second question. I'm looking here.
Okay.
That was the second question that came in. Can you please put up the slide identifying the earlier app we needed to download? Yes.
Okay, I can do that.
Mm-hmm.
Let's see here. All the way back up. There we go.
Third question coming in.
That's a great question. Yes. Please go and do this. And then make sure you put it on your homepage. It's very key. It's very simple. Thanks to John. It's app.the, and that stands for the Common Man's Financial Guide.com.
And here's a third question, Donnell. The interface with the Ameritrade is more user-friendly than the interactive brokers. However, should I select the option with stocks and mutual funds rather than Forex options, etc.?
Oh, yes. You should definitely pick the one without, you don't want to have a margin account. That's what they're trying to sell you. They're trying to get you to participate in their margin account. So you just want to go strictly the cash account when you do that, okay? What happens is if you get a margin account, even if you don't use it, they charge you every month for having it. Mm-hmm. What a margin account allows you to do is borrow money from the broker to invest in stocks. And if you invest it improperly, you still owe them the money and they can come and close your account if you don't pay them. So you want to just do your own cash. Don't borrow any money. So strictly stick with the cash option when you go online to do that.
So debt-free plays out all the time, doesn't it? Being debt-free.
Yes, sir. Yes, sir. All the time. It's very, very important to try to be debt-free in this life, especially with the uncertainty that's going on. And if you can get your money in this starting to work for you, you will see your account starting to grow by leaps and bounds. And that's what we're trying to do. But right now, we're just in a period in our country where all I want you to do is just accumulate shares. Every time you see a drop, just buy a few more shares. Just buy a few more shares. Just keep doing that as best you can.
Let's see. Is there any bad news in which you should not buy?
Oh, a company, that's a good question. If a company is going out of business, don't buy their stock.
Don't buy. Go towards the blue light.
If you hear that Coca-Cola is closing down shop, then do not buy Coca-Cola stock.
Good.
Okay, but no, only for great companies will you buy on the bad news. So usually there's not too many of those that you're gonna not take advantage of. You're gonna always take advantage of that bad news, because I want you to learn how to recognize a great company. And we're gonna talk more about that here in the future. How do you recognize a great company? And most of the times, there are several things that stand out. They're very marketable. In other words, when you see their emblem or their symbol or their icon, you know exactly who they are. Everybody knows them. You know their jingles. You hear their jingles in your head and you can sing them over again, and it's everywhere you want to be. Anybody know what that one is? It's everywhere you want to be. Who says that? Anybody? Type it in real quick. See, when you hear things like that, you go, wow, I know what that is. It's the real thing. Anybody know what the real thing is? What's the real thing? I see these companies all over the world. And when you see them all over the world, you go, they're doing pretty good. They're probably pretty good companies. And they're probably doing well. And then I can teach you how to look at the financials as well.